Nissan has committed to giving 10-year warranties to owners of old cars. It has enormous debt on its books, paying higher interest rates than any other legacy automaker in the world, and its car sales are continuing to fall. Its debt figures at this point in time and its financial stability is deeply alarming. Lowered to junk status by both Moody's, Fitch, and others, the automaker faces much higher borrowing costs than its investment grade peers. Now its mounting debt and its high cost to raise funds is combining with its declining car sales to create the perfect storm. YouTube's new algorithm means that you're often not getting all of our videos in your feed. There's 7,500. I'm pretty sure you're probably not seeing a lot of them. In the description, there is a link to our newsletter. Click on that and you can get an update every day of all the latest news in the electric car industry. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Nissan has fallen out of the top 10 best-selling automakers in the world for the first time in 16 years. According to Nikkei Asia, the Japanese automaker's 1.6 million global vehicle sales in the first 6 months of 2025, as actually reported by Nissan, put it outside the top 10 in the world for the first time since 2009. Japanese brand Suzuki, which doesn't even sell cars in the United States, it really doesn't sell many cars in China either. It just sells in Japan primarily, and India and Southeast Asia. It actually beat Nissan. The small car specialist reported sales of 1.6 million vehicles in the first half of the year to just beat Nissan for the first time in more than 20 years. BYD was the best-selling Chinese brand according to Car News China with 2.146, so basically 2.15 million car sales. SAIC Group, which owns the MG EV brand, well, I shouldn't just say EV brand because they make other cars, they sold 2.05 million. Both BYD and SAIC were well ahead of Nissan. Nissan sales were down around 6% compared to 1.7 million sales in the first half of 2024. Sales in China, the US, and Japan have all fallen. In Australia, Nissan sold 20,000 cars, which was a 17% fall. And that means it's actually in 11th place in Australia. Globally, Nissan posted a loss of $1.63 billion. That's Australian dollars for the April to June quarter. That's about 1.2 billion US dollars. And it also recorded its fourth consecutive quarterly decline. So this is not a one-off. This is happening relentlessly. Mounting losses have forced Nissan to announce the closure of 6 factories worldwide and they're actually also firing 11,000 people from their global workforce. There's also several EVs and cars that have been just basically, they were developing and they were going to bring them to market, and then they've said, oh, no, we're not going to make those cars anymore. So a lot of sunk costs gone into those vehicles that's now been cancelled. They've been affected as well by volatility in the crucial US market, where automotive import tariffs have really hurt them as well. Nissan is obviously not the only company being affected by tariffs, though. Other companies have been affected by them, and their balance sheets are still okay. So it's worth keeping that in mind. What does all of this mean? Well, Nissan's financial health is obviously bad. As I said earlier, its debt is now rated at junk. I really recommend, if you've got to buy a new car or a used car, I wouldn't personally buy a Nissan. I think there's too much risk here involved. I mean, look what's happened to people who own Fisker cars. They're in an enormous amount of stress trying to fix the cars. Nissan has approximately $5 billion in debt. It's actually $5 billion in debt due in the current fiscal year. It has to pay that money back in the current fiscal year. To raise the cash, the company is selling its own headquarters. That's not enough, of course. It needs to sell other stuff as well. It's trying to issue $4 billion in senior unsecured dollar and euro denominated bonds with staggering interest rates in the 8% range. Nissan's going to have to pay back these loans in the 8% range. All right? That's a very high interest rate in comparison to its peers. It also has a $1 billion US 6-year convertible bond. That's basically its way of trying to raise money. And it's hoping that the open market was just say, yeah, okay, Nissan, we'll give you this money. An additional expansion of the convertible bond to $1.4 billion US caused Nissan's share price to fall 6% as investors have feared, well, the worst, of course. Nissan posted a staggering $4.5 billion US net loss for the fiscal year ending March, the largest loss since 1999. Sales in major markets are declining sharply, most notably a 24% drop in China, which accounts for around 1/4 of Nissan's global sales. These slumping sales erode the company's ability to generate the cash flow needed to service its expansive debt. Bankruptcy probability. What actually is it? Well, with junk-rated debt, steep interest rates, massive upcoming repayments, and weakening revenue streams, and of course, declining sales, Nissan faces an increased risk of financial distress. Independent observers estimate its debt could balloon from about $1.6 billion in 2025 to $5.6 billion in 2026, prompting serious speculation that bankruptcy could become a real threat unless some sort of miraculous turnaround actually succeeds. I'm curious to know, guys, what do you think are the chances of a miraculous turnaround for Nissan are? Remember, they have to compete in China against some pretty incredibly tough competition. Much of that competition is more efficient than Nissan, more advanced than Nissan with EV manufacturing, and doesn't have the overheads that Nissan has. The bureaucracy, the Japanese bureaucracy, major. The internal combustion carryover, these factories that make internal combustion cars, it's a massive, really kind of inefficient problem hanging over Nissan. So here are the numbers. In short, Nissan's financial outlook has shifted from precarious to critically dangerous. Servicing its high-cost debt amid shrinking sales and ratings downgrades puts bankruptcy squarely in the realm of possibility within the next 24 months. Unless the company successfully executes its very ambitious restructuring and automotive retooling, well, the worst is likely. Guys, let me know what your thoughts are. Thanks for watching. Bye-bye.